Good morning, everybody. Welcome back to Trades and Gains. I'm your host, Max Pitts. And just when you thought inflation was cooling off, surprise, it's back bold and wearing sunglasses indoors like it's still 2021. Yeah, folks, the July producer price index just came in, and whoa, it's like the inflation monster found your Amazon password again. We were expecting a polite little 0.2% bump, like when the waiter refills your water without asking. Instead, we got a 0.9%. That's not a refill. That's someone dumping an entire Gatorade cooler on your head. So some quick Econ 101 here. PPI is basically what businesses pay for the stuff they need before they sell it to you. Think of it like the price tag Costco gives to Walmart before Walmart slaps on their own price tag and you cry in the checkout line. CPI, the one you always hear about, is the price you pay. PPI is the price businesses pay. If PPI is going up fast, it means the cost of making and moving things is going up, which usually means you, the consumer, are about to get slapped in the face with higher prices. So yeah, CPI earlier this week looked like a 6-month high, but PPI, that just walked into the room like it currently owns the place. So here's the part that made economists do that slow head tilt that dogs do when you say, do you want to go for a walk? Core PPI, that's the one without food, energy, and trade services, jumped 0.6% in just 1 month. That's the highest since March of 2022. Annual pace is 3.3%. That's the most since February. Why is that a big deal? Because if the core is this hot, it's not just about oil prices or lettuce shortages. It's baked into the cake, and that cake is starting to look like it's filled with jalapenos. Stephen Brown from Capital Economics called it a head-scratching increase in margins for wholesalers and retailers. The translation, retailers are finding clever new ways to charge you more without making it obvious, like when airlines now charge you for breathing. And the best part, a big slice of that bump came from portfolio management costs. So yeah, if you're wondering why inflation's up, it's partly because your stock market rally is making it more expensive to have people manage your stock market rally. And of course, we can't forget about tariffs, because nothing says a healthy economy like charging extra taxes on stuff we all need and then acting surprised when it costs more. Businesses have been eating those costs like a bad buffet, but their margins are starting to look like they've been on Ozempic. Economists are saying, and I love this, they expect a stronger pass through of levels into consumer prices. Pass through, that's just corporate for we're going to make you pay for it. So Wall Street hears this and immediately thinks, what's Jay Powell going to do about it? We're a week away from his big speech at Jackson Hole, which, by the way, sounds less like an economic symposium and more like a ski lodge where people drink overpriced whiskey. Before this PPI report, traders were sure the Fed was cutting rates in September. Odds were basically 100%. Now, still high at 95%, but that tiny sliver of doubt has snuck in. Like when you're 99% sure that in the middle of the night it is a cat, but you still go ahead and grab the baseball bat. So here's what could happen next. Scenario 1, PPI keeps climbing, CPI follows, and the Fed gets cold feet on rate cuts. That means rates stay high, markets throw a tantrum, and Jerome Powell becomes that guy at the party who says, actually, I don't think we should open another bottle of wine. This is scenario 2. A one-off blip from weird stuff like portfolio management fees and tariffs. Inflation cools again, the Fed cuts, and Wall Street starts ordering champagne like it's 1999. Or scenario 3, we get stuck in this awkward middle ground where inflation doesn't die, but it also doesn't spike. The Fed cuts a little, markets get excited, but remember, oh, right, this is still America, and we still pay $7 for a loaf of bread. So the bottom line out of all of this, PPI just told us inflation isn't dead. It's just been at the gym getting a little more toned. The real test, whether businesses keep swallowing these costs or hand the bill to you. And given corporate America's track record, let's just say I wouldn't hold my breath, unless, of course, they start charging for that too. But hey, at least we still have Jay Powell's Jackson Hole speech to look forward to, because nothing says fun like a bunch of central bankers in the mountains deciding if the rest of us can afford rent. I'm Max Pitts. This is Trades and Gains. Hope you all are having a great morning, and I will see you in the next one. And this is your PPI breakdown.